That's gold. Okay. That's not debt. That's not currency. Now, we talk about currency, dollars, yen, euros, as money. They're really not. They're currencies. And that doesn't make them bad, less good or worse. It's just they're different. Currencies are the things that we use as medium of exchange, not as a store of value. Money has been a store of value, true money, great gold for 5,000 years. And that's easy to prove. It's one of my favorite things about gold, right? Is
Yeah.
a single ounce. If you have a 1 ounce coin in your possession at any point in the last 5,000 years.
The U.S. spot Bitcoin exchange traded funds performed well this week, with over $88 million in inflows on Tuesday, the second highest daily inflows since their launch in January. On Wednesday, they had combined net inflows of $44,881 million. Wednesday was the 17th straight trading day of inflows for the funds, equal the February record. On Thursday, the ETFs had their 18th consecutive day of net inflows. The 11 funds received $27.78 million from Black investors. ROC's IBIT asserting supremacy IBIT had $350 million in net inflows, followed by Fidelity's FBTC and VanEck's HODL ETF. 5 spot Bitcoin ETFs, including Invesco Galaxy's BTQ, had no inflows, while ARK Invest RRKB and Grayscale's GBTC had $96.6 million and $37.5 million net outflows in 5 months. During a recent discussion with Gary Cardone, Morgan Creek Capital founder and CIO Mark Yusko stressed the importance of spot Bitcoin ETFs and their impact on Bitcoin prices. Yusko predicts that institutional investors will be clamoring to get into Bitcoin through ETFs in the next year. Please subscribe, and turn on post notifications for more videos like this.
It's not even the value of it, Gary. It's the size of it.
Correct.
We know there are 2.1 quadrillion Satoshis.
Right.
That's plenty, right? That's plenty for everybody. And there's no question in my mind, right, that everyone from, I use the example of my granddaughter, right? My granddaughter's 1, and she's a Gen A, a Zoomer, right? So she'll never have a leather wallet.
Never. She'll never have a
ever, right?
man.
She will never touch paper money.
Never.
Because by the time she's able to open up a bank account, which used to be a rite of passage as a teenager, she won't do that. She'll just have a wallet, a digital wallet with digital money. And is it possible that every microtransaction she does for the rest of her life will be in Bitcoin? Sure. But it's a small amount of the total number of Satoshis that'll just constantly swirl. The rest will be what it is, the perfect savings technology. So I have my savings bucket of Bitcoin, but I could have a small amount. Today it's fiat, but it's not even fiat. Today it's entries in a database at Visa or MasterCard. I use MasterCard. So that idea that someday everything, all currency, will be Bitcoin, sure, it's possible. Holy moly, it'll take a long time for that to happen. And could there be other things that are better, faster, cheaper? Like, are stable coins better for that purpose? Kinda, yeah. I mean, but there is a point also where Bitcoin could be so mature that the price doesn't move.
Yeah, that's right.
Right? Now, all the people who are buying it to get rich would say, no, price has number go up. I need number go up. No, what you need is value of the network to rise, and your ownership stake increases in value.
The spot Bitcoin ETFs were approved in January, and Yusko predicted they would attract $300 billion in the first year after launch. This is 1% of the $30 trillion worth of advised wealth, and Yo estimates the funds should have 100 to 1, 20 billion in assets under management by now. However, wirehouses have not supported the spot Bitcoin ETFs, but issuers like ARK Invest's Kathy have. Matt Hugin says the platforms are taking their time to examine the situation before joining. They believe each of the four main wirehouse brokerage firms, Morgan Stanley, Merrill Lynch, UBS, and Wells Fargo, will list the items. In a recent tweet, senior Bloomberg ETF analyst Eric Balunis noted that getting onto advisory platforms and even better, into their models like Merrill Morgan ETSI is the holy grail of ETF marketing. He also included a chart showing the largest ETF holders. After Bank of America, Morgan Stanley, BlackRock ranks 7th. JP Morgan and Wells Fargo, which rank 1st, 2nd, 3rd, and 5th, will easily exceed expectations when they introduce Bitcoin ETFs. Let's return to the interview.
Talk about it, right? Okay. Gold is money. Money is an asset that exists in the absence of a liability. Yep. That's gold. Okay. That's not debt. That's not currency. Now, we talk about currency, dollars, yen, euros, as money. They're really not. They're currencies. And that doesn't make them bad, less good or worse. It's just they're different. Currencies are the things that we use as medium of exchange, not as a store of value. Money has been a store of value, true money, great gold, for 5,000 years. And that's easy to prove. It's one of my favorite things about gold, right? Is a single ounce. If you have a 1 ounce coin in your possession at any point in the last 5,000 years, you could exchange it for the equivalent of a fine person's suit. Wait, hold on a second. You mean 5,000 years ago, 3,000 years ago, 1,000 years ago, 100 years ago? Today, you get the same thing for that 1 ounce? That's kind of freaky if you think about it. I mean, it's amazing. And yet, all over that period, currencies have come and gone, right? I mean, there was a time, people forget, there was a time when the, what the hell was the name of it? The Italian, is it the ducat?
The Medici group?
Yeah. I mean, it started with the Venetian group, and then Florence and the Medicis kind of took over. But there was I should remember what this is, but for about 300 years, this Italian currency was the world reserve currency, like 1530 or 1560, something like that. The Portuguese ruled the world. I mean, they literally ruled the world. And then the Spanish Armada conquered them. And the interesting reason, people hate when I tell a story, but I like it. The reason the Portuguese were in charge, one, the Knights Templar were really badasses, but more importantly, they had the tallest trees. Therefore, their ships were the fastest.
Oh, wow. Wow.
Navy was the best. And so they had naval superiority. So when Spain conquered them, they had the fastest ships. And then the Dutch, because they invented central banks, printed money, created a mercenary force. And again, Netherlands is about the size of Ohio. They took over the Spanish Armada, which was, we're talking the badasses of all badasses. And now they were in charge. Well, then they had the fast ships. Well, then the British, with their central bank, bought steamships. And once you had steamships, you had naval superiority. So then they took over. Well, then we got nuclear power, and now we are in charge. And now the next gen, two schools of thought. One is, well, China figured out that the next war isn't kinetic ground war, it's chips, not ships. So they don't need aircraft carriers, they need cyber superiority, which they probably have. And TikTok's a great example, right? And so they could be the next reserve currency, or we could flip to the next gen, which is Bitcoin. So the tech kind of truncates this, nation state being in charge. And to me, it's a coin flip as to which one. I don't really care, because I'd be perfectly happy if the renminbi had a stint. But ultimately, I do think that Murray Stahl was right. And you should get Murray on sometime and interview him. He's amazing, from Horizon Kinetics. And it's funny that we just released in the 13Fs that he has. So he runs this from Horizon Kinetics, and they have 14% of client assets in the Bitcoin ETFs. And he's been in Bitcoin for a decade. He was super early. He's one of the biggest miners in the country. I mean, I would say he's the only person I know who makes me sound bearish.
Meanwhile, crypto Twitter users are getting antsy because of the way the market is right now. Even though ETFs have been successful and hundreds of big institutional investors are buying every day, prices should be much higher than they are. There has been some speculation that BlackRock and others are purposely lowering prices on the futures market to get cheaper Bitcoin for their ETFs, but Eric says the problem is internal. I've said it before, and I'll say it again, this isn't ETFs doing it because they're buying like crazy lately, it's Bitcoin holders selling or leveraged flushers or whatever. That's why prices have stayed the same since March, regardless of BlackRock's or other manipulation. Comment on Marcus's conversation below and let us know what you think. Also, make sure you like this video, subscribe to the channel, and turn on notifications. Please click the bell to see more movies like this.